Hello traders, Gary Wagner here. It is Friday. Happy Aloha Friday as we say on the islands, and this is the Daily Report for Gold and Silver, our weekend review, and an interesting week in that even today's strong showing in the precious metals markets across the board was not enough to make up the carnage that we witnessed earlier this week, specifically with gold and silver going down 10%, and going down about 3% on two occasions this week. Gold had the same type of action, going down $25 and $40. So we saw both precious metals closing lower on the week, yet there is rekindled optimism because it seems as though President Biden will be able to push through his proposal for a $1.9 trillion aid package with only Democratic support. To that end, we should see the dollar drift lower and gold and silver have follow-through buying next week, but we'll have to see. Let's take a look at our first chart and the price board. In terms of percentage gains today, gold resulted in the smallest gain. It still gained a healthy $24, with the most active April contract currently fixed at $1,815.20. Spot gold is currently fixed at $1,812.98. Traders, the first chart that we are going to look at is a weekly chart of gold futures. We can clearly see that even with today's respectable $24 gain, it certainly did not make up for the $25 drawdown and $40+ drawdown that we witnessed this week. We can see that gold opened up near 1865 and closed at 1850. However, it did break briefly below that during the week, trading to a low here of approximately $17.80. But traders, it is the daily chart in gold that market participants as well as market technicians have been focusing on most intently, specifically some of the technical indicators. I draw your attention to this circled area in which we have the 50-day moving average in green, and that, of course, is the shortest term that we use to predict short-term momentum of a trend, and the 200-day moving average in red. While it seems as though it was imminent that we could see the 50-day cross below the 100-day, creating what is known as a death cross, at least for today, we've seen a small hook in the 50-day moving average, as it is obviously more sensitive to short-term data moves in the market, and that is something that's spelling a small sigh of relief for gold bulls, because of course a death cross that is confirmed and actually goes in deeply would really require gold pricing to go down between $60 and $100 lower than the lows that were witnessed on yesterday's trading activity, and could have taken the market to either 1771 or actually below 1700, which is where the 61.8% retracement area comes in. We'll compress our chart to show you that is at 1695. The other thing is that in terms of a daily chart, we do get a bullish harami pattern that comes in, but at the same time, we have talked about key reversal patterns in Japanese candlesticks, with this particular pattern type, the bullish harami and bearish harami, being the weakest of all the key pivot or reversal patterns, such as a piercing line or an engulfing bullish. Nonetheless, if we see the market firm up through the beginning of the week, we are still below many of our major technicals that we follow to say that we can find evidence that we've gone back into a bull market. There's certainly no evidence of that yet, but this would be the first signs that we would see if, in fact, the market is going to do some sort of key reversal, because realize that back in the middle of January, after we hit this top at 1960, we've had a methodical decline in pricing, and although the low that came in prior to the low of 1771, which is at the 50% retracement, we did get a higher low and then break that pattern with a lower low compared to the last low, coming in at around 1785. Traders, we are maintaining our neutral stance in gold in both futures as well as our ETFs. We would look to re-enter the market from the long side, but only if we had clear technical evidence that we're back in a bull trend. We cannot say that, so I remain cautiously neutral to slightly bearish on gold, although that could change next week. The greatest percentage gain today in the precious metals complex was platinum, gaining $34.80. That is 3.16% in terms of its gain, and is currently fixed at $1,137.80. Gains in silver came in right under those in platinum, gaining 3.05%. That's an 80-cent rise, taking silver futures basis the most active March contract to $27.03.5, while SLV, and we are currently long and have an additional leg, closed at $24.95. That is above the purchase price of the second leg that we entered. We will look to raise our stops at the beginning of the week in our SLV positions. The first silver chart we are looking at is a candlestick chart in weekly format. We can clearly see that it did close below the open on Mondays. That's why we have a red candle. But what is noteworthy, and we'll really see that when we pull up our daily charts, is that the close this week is still above the close of last week, which is the top of this green candle. Because what we have talked about throughout the week is the fact that silver did not sustain any major chart damage, especially the type of chart damage that we saw in gold as it broke through the 200-day moving average and continues to be trading under that critical price point. Also, as we talked about in gold, we came close to witnessing a death cross between the 50 and 200-day moving averages. The same cannot be said for silver. We have just pulled up our daily chart in silver, and if anything, what market participants and technical traders are looking at is the fact that back on the end of January, we actually had a golden cross between our 50-day moving average, which is in green, and our 100-day moving averages in blue. What is most noteworthy is the fact that the formation of these three moving averages are in its proper bullish demeanor, meaning the 200-day moving average is sitting at the lowest. That is followed by the 100-day and finally the 50-day. We're not seeing that in gold either because we still have the 100-day moving average above the 50-day, and we've got the 50-day that has really gone just but up against the 200-day. And so for that reason, I remain bullish on silver, although I'm neutral to bearish on gold. We will maintain our long SLV positions, our first leg as well as our second leg. Our first leg is in very nice profits, but I'm looking at this as a long-term position trade rather than just taking the trends in this type of choppy market. So we will maintain both legs of our long silver SLV and look to raise the stops, as I said, early next week. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Have a great weekend. Bye-bye.